Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
That's the first rate. The Nifty is down about 5 points. Down 10 points now, 10,812.
We are consistently getting FPI selling day in and day out. Still it's holding. And the reason I think it is holding perhaps is a lot of churn is taking place in people's portfolios. People who are underweight on large caps are now moving to the large caps.
KRBL is no way concerned in Augusta West indeed.
You're confirming that KRBL will feel no impact of this ongoing investigation?
No, not at all.
We do gather that August 1st could be the next target that both Idea and Vodafone would be working on.
Almost 2,500 factories have closed down. Almost 300,000 people or 3 lakh people have lost their job directly. Indirect unemployment would be more than 1 million people.
The market seems a bit rained out, doesn't it? 28 points lower on the Nifty.
Tata Motors really was the stock of the day. 6% lower is what we have on that stock. HPCL was down 4%. Really, the back of the bulls today was broken because of ICICI Bank. That was one stock which sort of got its mojo back, but clearly at 300, well, everything is in the price and that stock starts to fall again.
Volatility continues as global cues wipe out gains in late trade. Sensex closes below 35,500. Nifty slips 0.5%.
The Met Department issues what is called an orange alert over the West Coast. It's predicting heavy to very heavy rains in Mumbai and surrounding areas. 2 buildings collapse in the city. Train services and traffic is affected due to waterlogging.
Idea stock tanks after reports that merger with Vodafone has been delayed. Sources say the telecom firms have revised the deadline to the 1st of August, but Vodafone remains confident of receiving regulatory approval soon.
ICICI Bank stock slides over 3% after another whistleblower complaint. The bank's management clarifies on the allegations but are unable to assuage the market. On the other hand, we had PNB Housing Finance, which closed up 14% after reports emerged that HDFC and Kotak Bank are eyeing a stake, maybe a majority stake in the company.
Tata Motors loses ground on cautious demand commentary for JLR and the expectation that cash flow could remain under pressure in the near term. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about everything that's happened in the 8 hours of trading in the markets in just 5 headlines. We're going to tell you the losers and the gainers and what you can do about them in terms of action. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. Welcome back. Okay, over the next 30 minutes, as Lata pointed out, we discuss the top 5 market headlines. Our experts will answer the questions that you send our way each day. Joining us to answer all your questions are market experts Deepan Mehta and technical expert Rahul Mohinder. Gentlemen, thanks very much, Deepan and Rahul, for joining in on the show. Before we start the Q&A session, as always, let's quickly wrap up the day's trading and what really happened, starting from the very beginning. Lata.
Well, first, since you said welcome back, let me tell you that the last day I did markets today was on the 7th of July. Right. And that day, the 7th of June, that day the market closed at 10,768. And today it closes at 10,762. Oh. So really, we have not done much in 2 weeks and 1 day of trading. Oh, yeah. But maybe the positive part is, for a better part, the market remained above this level. It went up to 10,000.
We'll pick up pace now that
yes. Okay, the bull is back. Well, I think today the markets were not very helped by the global markets. Yeah. It quite clearly is once again President Trump's tweets and expectations of China retaliating and attacking exactly where Trump's electoral base lies. So it's just that conversation which is keeping the markets extremely ranged, whether it's Asia or whether it's Europe. Both sides of the Indian trading hours did not help us. And while the Indian markets held up with just about losses of 0.1, 0.2, 0.3 in earlier part of the day, they just crashed to a 0.5% loss towards close because help was not forthcoming from Europe. We could perhaps say that there was a shift to quality, because what held up the market were the two Bajaj twins, were the HDFC Bank, Kotak Bank kind of stocks, and what gave away was the TAMO, the ICICI banks, stocks where there is some kind of a risk involved. That was the broad trend that I could glean. But you tell me stock specific if there was anything else.
And so you mentioned what was slipping. PSU banks were slipping as well. So that's top of the list actually in terms of sectors which lost ground. Real estate lost ground. We had autos which actually were as a sector in losses. So anything between 1.5 to 2% plus. In terms of large stocks, I mean, you said Tata Motors again 5% down. We're going to discuss that in some more detail. HPCL was lower. Large cap bank, PSU banks, Bank of Baroda, ICICI Bank slipped. L&T, DLF were some of the others. Well, there were gainers as well, not many, but Ultratech, Bajaj Finance and Infratel, Bharti Infratel, they stood up 2% to 3% gains on those three. But long list of stocks in the broader market, both some in the F&O space, some not, but which lost ground. So Idea, look at that cut, 7.5%, Motherson 5%, United Breweries was down 4%, large volume, Sun TV, Nagarjuna Construction, Canara Bank, KRBL, of course, I mean, it's very stock-specific reason, but KRBL was down, I think, what, 13, 14%. Sundaram Finance, Teamlease, by the way, made a new high on Friday, life high, that is in a market like this. That lost some ground, 5.5% pullback. Some, stocks which stood out on the higher side. So there was Page Industries. I mean, that continues to go higher, 4.5 up there. PNB Housing Finance, huge volumes, 14%. And HEG, actually, it was not just HEG, but the entire carbon black story, which looked good, 5% there on HEG today. Lata.
Okay, well, that's how things are panning out in terms of stocks. But let's get to our guests and ask questions that are topmost on your mind. Where is this market headed? First, our technical expert, Rahul Mohinder, is with us. Rahul, thank you very much for joining us today. What's your sense? Is the market likely to move towards the lower part of the range, or is this a good time to buy so that we are in a better position to breach 10,850?
Good afternoon, Lata. I think first of all, it's a bit of perspective that one needs to bring in here. There's a lot of impatience about the fact that we haven't gone below 10,700, we haven't gone above 10,900. So I think that's what's eating people up, that the market's stalled. So one way to look at it is, are we still going to continue into a sideways zone, or are we going to break down or trot up? From a technical perspective, we're above all the key averages. Most of the indicators still stay positive. We're not in an excessively overbought index when you look at all the oscillators. So there's no technical reason for me to immediately say this is a top, or we're topping out, or we've broken any key levels. So I think one needs to wait. One needs to wait for levels like 10,700, 10,540. These are the two key numbers on the downside. And this market can always claw back in a jiffy. So I think wait for the levels to break down before rushing to conclusions. There are still stocks which are fairly potential, even in the Nifty heavyweights.
Okay, so that kind of sets us up as far as the market is concerned. Let's move on to the second big story, and that is rains. I mean, if you're in Mumbai, it's top of conversation, top of minds. The Met Department has issued an orange alert over the west coast. Mumbai and its adjoining areas might have to put up with the monsoon fury for the rest of the month. Well, some would say thank God, as the IMD forecasts heavy to very heavy rainfall. Incessant rainfall over the weekend has resulted in the collapse of 2 buildings in Mumbai. Waterlogging in several areas has delayed train services and led to traffic jams. The monsoon is expected to cover the entirety of Maharashtra over the next 24 hours. We spoke with the IMD spokesperson earlier in the day. Let's quickly listen in.
Generally, along with the monsoon, we get a heavy to very heavy rainfall across the west coast. It's a very common thing. But as of now, there is an orange alert in the west coast. And we are expecting in the Mumbai, there will be heavy to very heavy rainfall activity. There could be some problems for the city. At the same time, there also we have given a heavy rainfall alert over Assam. So there, those regions as of now highly shortage, around 30% of below normal. so there will be improved rainfall activity.
Okay. Well, rains, while you make crib that it's going to be dreary getting to work and getting back from work and tragic for building collapses, it also means positive in terms of stock picking. So, Deepan, that question to you. Rain-related stocks, rural consumption-related stocks, what would you pick now that Rahul is telling us that he wouldn't worry that technical indicators still indicate that markets could break up and not break down?
Well, I think automobiles would be coming top of the mind over there, especially companies like Maruti and Hero Motorcorp, and now even Eicher is making foray into tier 2, tier 3 cities. So I think that one of the good ways to play rising rural consumption is the automobile companies, and then there are select FMCG companies as well, like Imami is there, or Dabur is there, or even HUL for that matter. All these companies will benefit from rising rural consumption. And then, of course, there are the traditional fertilizer, pesticide companies, something like a Jain Irrigation also, which will benefit from increased rural spending. And not only that, I think, with the election season coming up, we can expect even more money in the hands of the rural folks. So, on the whole, I think investors should have some kind of a strategy and exposure to companies that benefit from rising rural consumption. And the sector that I spoke about, I think, kind of, would enable investors to take exposure to that specific investment theme.
Okay. I will come back to both of you with the two sectors that in this month have actually shown a significant rise, pharma and the Bajaj twins, so perhaps NBFCs. But I'll come back to you in a minute. Let's get to the third headline. This is CNBC TV18 exclusive. Idea Cellular stock tanked more than 7% in trade today after reports suggested that Idea Vodafone merger could be delayed. This on the back of a fresh 4,700 crore rupees sought by the Department of Telecom from Vodafone India. Nisha Podar, who has been tracking the story and who has broken important details, is with us. Nisha, you spoke to Vodafone. Tell us, what do they have to say? And, of course, about the timeline of the deal.
Idea Cellular stock cracked in trade because of the uncertainty regarding the final DOT approval coming in for the formation of largest telecom company in the country by merging Idea Cellular and Vodafone India. So there have been reports which suggest that Department of Telecommunications may ask for 4,700 crore rupees as spectrum charges from Vodafone India for the clearance of the merger to go ahead. Now, we do not have any clarity on that at this point, but we do gather from sources with direct knowledge that because of the uncertainty and the delay in getting the approvals, Idea as well as Vodafone India may really push their target of consummation of this merger by the end of the first half of this particular calendar year to probably August, and that's what we are gathering at this point. But remember, the DOT's charges as well as and claims as well as this date may be changed because of various factors involved here. So we'll have to keep an eye out on this one. Now, big fallout of the delays that Idea Voda merger process is seeing is also the uncertainty amongst the employees, and we do gather that there is heavy attrition of in double digits that Vodafone India could be facing. Idea is also facing some bit of attrition. Both the companies may have really offered retention packages to some of the key employees and some of the senior level executives as well, is what we gather. When we reached out to both Vodafone as well as Idea did not respond to our queries, but Vodafone did say that they deny any such fresh claims by the Department of Telecommunications, and they are confident of getting the final approvals for the merger to go ahead.
Nisha, thank you very much for that comprehensive wrap out. We've got a question on Idea. Ellison has written to us. He's been holding 200 shares of Idea Cellular. His purchase price is 104 rupees. He's been holding stocks for the last 6 months. He's a medium-term investor, wants to know if he should hold or sell. 104 is his purchase price. I mean, basically, he's down almost 50%. Deepan, what would you tell him?
I think considering the erosion which has taken place in the stock price, it's better to hold on for a while, and some kind of positive news flow will come sooner or later as regards the merger. And once the merger has been announced, then there will be also strategy statements or further communication coming in from the management as to how they're going to grow the business and what benefits will be there from the synergies of the merger of the two companies. At that point of time, you may see a trading rally in Idea, and that is the point one should exit out of Idea. I am not at all positive on the entire telecom industry. I think the disruptive forces and the pricing pressure continue as it was earlier as well, and that's going to dent the profitability and the return ratios for all the telecom players. So at an opportune moment, one should look at getting out of Idea as well as Bharti Airtel. It's just that the price erosion has been so severe for Idea that it's better to just wait out for a few more weeks or months and hope for some positive news flow which could take the stock price up, and then look at exiting.
Okay, so exit because you are likely to get a higher level. That's the answer for you, Elicit. But before we go into our mandatory break now, a question to you, Rahul. You said that there are no negative indicators. It's not as if technically the market will break down. Those levels have not reached. If the markets have to break out, then what could be the stocks that would be the stronger candidates?
I think what could lead from the front could actually be a stock like Reliance Industries. I mean, I would look at that as my first short-term trigger. I would think that 1,060 to 1,070, that would be my price target on Reliance Industries to start with. And if I have to, add more to the list within the heavyweights, I am waiting for SBI to really get past 273. And these numbers are fairly close by. It's just that I'm being very short-term in terms of picking the finest or the earliest sign. Okay. So if 273 breaks out on SBI, that could also be a runner. We could get a good 5-6% there. So these are the two heavyweights I'd watch for within Nifty stocks.
Okay, Reliance and State Bank of India could lead. Rahul, we are coming back. We have to take a very quick break here. Both Deepan and Rahul, stay with us. Before we go, let's just very quickly take a look at what the Interim Finance Minister Piyush Goyal had to say at the 3rd annual meeting of the Asian Infrastructure and Investment Bank. We'll be back in a jiffy.
Prime Minister Modi believes that it was important that we should bite the bullet. Finance Minister Shri Arun Jaitley brought out the truth before the nation. And I think the nation will ever be grateful to Prime Minister Modi and Finance Minister Mr. Jaitley for having brought the reality to the front, for addressing the problems of the banking sector and strengthening them to once again start becoming a powerful engine of growth, financing infrastructure, financing the credit needs of industry. And the Indian banking system is now poised for very good times ahead.
Welcome back. You're still with us here on Markets Today Talk Back. We're, of course, answering the questions you're sending our way. Deepan and Rahul have been doing that. We got through 3 of the top stories of the day. Here's the 4th one then. These are basically 2 stocks in news. First up, ICICI Bank, which had a dismal run. The stock was down nearly 4%, all thanks to another whistleblower complaint. The bank, however, did clarify about these allegations in its statement. Sonal Sachdev is now joining in with the details of what these allegations are and what the bank said.
ICICI Bank continues to be in the midst of a controversy. A whistleblower at the end of March alleged that financial irregularities have been noticed with regard to 31 accounts that the bank had not provided for in terms of provisioning, and this inflated profit over 8 years. The bank has responded saying that while there might have been some delay in provisioning, these have all been provided for by the end of December last year, and that the books presently display the correct picture. The whistleblower also alleged that filings with the SEC have been delayed. The whistleblower claims that the top brass of the bank was involved in ensuring that this lower provisioning did not come to light.
Okay, well, low provisioning was perhaps, many banks were guilty of that, and that's why the AQR, the Asset Quality Review from the Reserve Bank. But Sonal, stay on. The second stock that has been in focus today in the finance space is PNB Housing, which gained almost 14%. This coming on the back of reports that HDFC and Kotak Bank are eyeing a majority stake in that company. Sonal, tell us what did we hear from HDFC?
The PNB Housing Finance stock was in the limelight today, given reports in the morning that two leading financial sector players, HDFC Limited and Kotak Mahindra Bank, were interested in picking up a strategic stake. The deal was purported to be valued at about 6,000 crore. However, the management of HDFC came out to say that they have not expressed any interest in acquiring the lender. CNBC has also not independently been able to verify the interest from Kotak Mahindra Bank on this. PNB Housing has also come out and informed that it does not have any knowledge of any such discussions.
Sonal, thank you very much for that. So that's Sonal on ICICI Bank and PNB Housing. Time for another question coming in from a viewer. Deven is calling us from Ahmedabad and he's got a question on PNB Housing Finance. Deven, go ahead. What's the question?
Yeah, I bought 65 shares of PNB Housing at 1,545. I'm holding it from, I think, about a year back. So now what is the short-term and long-term view on the share in view of this merger and acquisition? Okay. Because PNB management has already announced that they are going to sell their controlling stake.
Okay. We'll do one thing. We'll get you both views. First, Deepan, the long-term view on PNB Housing.
See, I think it is event-driven, but looking at what happened with Canfin Homes, I am not that optimistic of a very high valuation for PNB Housing. And the reason is that a lot of PNB Housing origination of loan comes from Punjab National Bank itself. A lot of employees are on deputation from there. At the same time, I think a lot of the business gets generated because of the PNB brand and the network which rides on the network of the main Punjab National Bank. And therefore, for a new company to take over PNB Housing and get the desired synergies appears to be a bit difficult. There has to be a very specific strategy as to how PNB Housing would fit in to say something like a new acquisition done by any of the private sector banks or the other housing finance companies. So I'm not that optimistic of PNB Housing per se getting a high valuation, and keeping that in mind, I think not that positive on the view on the outlook for PNB Housing. I think even at these levels, or maybe there could be some more trading bounce in PNB Housing, these are good opportunities to exit out of PNB Housing, and preference has to be for finance companies which are focused on retail lending, maybe consumer finance or gold loan companies, microfinance companies. I think the prospects for those segments in the NBFCs appear to be far better than housing finance companies.
Okay. But then a sharp support at 1072. Do you think he can look for a better position to exit in the short term, Rahul?
I think after today's rush up, you might probably see it move up a few percent points, probably 2 or 3%. But again, I kind of agree with Deven there that probably 1,300 odd. I mean, that's where we're kind of capped. 1,100 big support, a lot of volume clocked around those levels. Likewise, 1,290 to 1,320, somewhere there. That's the pocket of resistance you might hit or may not be able to cross. So as soon as you get closer to approaching those levels, I would exit off the stock. I think a rally like today, a bounce like today can be used as an opportunity.
All right, Deven, I hope that answers your question. So, I mean, don't wait for your purchase price, but advice is to get out around 1,300, a little over 1,300 or so. Okay, the last headline, the fifth headline of the day, Tata Motors is the stock, and it reflected what the market did. It was down about more than 5%. The company is cautious on as far as demand commentary for JLR is concerned, and the expectation that cash flow could remain under pressure in the near term stays. The company also kicked off last week the JLR Investor Day to lay out a comprehensive turnaround plan. Rima is now joining in with some of the key takeaways. Rima.
First ever investor meet by JLR held on Friday, where the company is given a medium-term outlook on sales volumes. They say it will be faster than the industry growth, at least in the premium segment. On margins, they are looking to target EBIT margins between 4 to 7% versus 4.2% that they clocked in last year, and an annual capex guidance of £4.5 billion over FY19 to FY21. While the margin guidance was known, this improvement in margins, the company articulated how they will achieve it. So it's cost-cutting initiatives, operating leverages, as well as new product launches. CLSA believes JLR also sounded cautious on the demand outlook. So according to them, FY18 volume growth was lower than expected due to diesel uncertainty, Brexit, as well as high incentives in North America. Also, they believe that high capex spend will put pressure on the cash flow. So CLSA remains negative on the stock given the multiple headwinds. They also think the stock is not cheap given where its global peers like Daimler and BMW's valuations are trading at. Nomura, on the other hand, maintains a buy with a target price of 490. But the bigger risk for the company will be the imposition of high tariffs on exports to the US coming in from EU and UK.
I'm sure they all are all bursting with questions on Tata Motors, but unfortunately out of time. We're going to answer them shortly tomorrow. For the moment, it's a wrap on this edition of Markets Today Talkback. Thank you all for watching, and thank you, Deepan and Rahul, for participating with your answers.